welcome to At the Forefront Fintech Conversations. I'm Michael Kingsley, and I'm a Senior Vice President here at Forefront Communications. And Forefront's a strategic comms, marketing, and PR firm focused on the capital markets and institutional fintech sectors. Today, I'm talking with Cynthia Sachs and David Kamp at our client, Versana. Versana is an industry-backed fintech on a mission to make the syndicated loan market better. We're going to talk about what that means right now. So Cynthia is the founding CEO, and David is the Chief Technology Officer. Cynthia and David, thanks for joining us today.
Hi, Michael.
So you just announced something very exciting, which is the launch of the Versana platform. Tell us all about that.
Yeah, sure. I'm happy to pick up on that. Thanks for having us, Michael. It's a really exciting time for Versana. After a number of years, we finally have launched a platform for the syndicated loan market, our version 1.0 product. And we've already onboarded some key clients. We're very excited about this initiative. And for those of you who might not know about Versana, we are an industry-backed data and technology company, and we are on a mission to transform the syndicated loan market. So we have big sights ahead of us and plans, and our platform is a centralized platform for the market where we are digitally connecting into agent bank systems of record and centralizing them in one place for real-time data. And this has never been done before. It's unprecedented. We're trying to really take a new, fresh approach to the market to add quality data and new tech in a modern way to really change the way this asset class behaves and solve some of the challenges that have existed for quite some time.
And I've been working with you guys directly for a while, and I think one of the most exciting parts and one of the big reasons everybody can believe this is going to work is some of the big names you guys have backing you. So can you talk us through who the big banks are and a little bit of the genesis of how Versana got started?
Sure. So this effort or initiative has been in the works, I'll say, for over 4 years. The banks came together. Our founding investors are JP Morgan, Bank of America, Credit Suisse, and Citibank. And as large players in the U.S. institutional market, also they're players in what we call the pro rata market, just generally in leverage finance. They came together to change the paradigm in this market. So this has been an effort first within the banks for a number of years, obviously socializing it and bringing that concept forward to stand up a company, which now is Versana, which happened about a year ago. And then obviously capitalize the company, bring management in, myself being employee number one, very excited to say. And then over the course of this past year, we will have close to 20 employees by the end of the year. And David Kamp, who's on with us, came in over the summer in July. Thrilled to have him. He's a fantastic CTO and clearly has taken this platform to where we are today, quite frankly, to the launch to be in the market to solve, all these challenges that exist today.
Yeah, absolutely. I want to throw it to David in just a second, because I like that background you gave us there about who's behind it all and what the theory is behind it. But it's really the technology that's driving it, and I think that's where David comes in and can tell us about what's different here, what's new here that brings it all together. David, welcome. You've been with Versana for a little while now, but can you tell us a little bit about that, about the technology that's driving this?
Sure. The technology here, there are a couple of key pieces to it. And it's first what Cynthia said, that we're getting data directly from the books and records of the agent banks. We're then taking that information, we're putting it in one common format that can be secured and then shared across the ecosystem, so both the agents and the lenders have access to that same set of data. This will be transformational for the market. It's going to bring transparency and efficiency to a market that is in desperate need of it at this point. And what we've really built today from a technology perspective is foundational for all of the other things that we're going to do as we continue to layer services on top of this data platform.
Yeah, I like how you talk about like the sort of the moment in time that we're at right now. And that's my next question to either one of you is, what is it about the end of 2022, the beginning of 2023, where we are in this industry right now that makes this timing so important, that makes it so urgent that this technology and this platform be in place right now? What does it mean to the industry?
Yeah, I mean, this market, the syndicated loan market, has grown dramatically over the last, I'll say, 2 decades. The genesis of the market dates back, I'd say, to the 90s. when there was a lot of consolidation within the banking, within the banks. They consolidated, they had risk that consolidated and therefore needed to de-risk themselves and needed to figure out a way to do that. So there were various markets that, were an outgrowth of that. The CLO market, or the, kind of the off-balance sheet shadow banking market, was a part of that. And so the kind of syndicated loan market, in terms of creating a marketplace for loans, began. Not that loans are new, but this specific portion. And so CDS was another one of those asset classes that, was born at that moment. So it's been many years. This market has grown. It's grown dramatically, particularly over the last 10 years. And operationally, the market has just not kept pace. So there's a lot of manual processes that still exist today. And there's a lot of antiquated technology that continues to exist. And we're here to bring a fresh approach so that the market can actually function properly with the right data, real time, high quality, and as well as the proper technology, a modern, tech stack that David, is very much, in charge of, to bring both sides to the equation so that the market, has a streamlined approach and can function with much more velocity than it has functioned historically.
Yeah, that's great. And on the why now front, David, I mean, there'd be people who say like this could have been done before, it should have been done before, that sort of thing. What is it about where we are now in the technology that is allowing you guys to capitalize and finally make this a reality?
So I don't know that it's so much about where we are with the technology now. I think a lot of it is about the need for this in place. And we happen to be leveraging technology to help bring that to fruition. One of the things that we're doing, we are leveraging new technologies to do this. One of the nuances or the special pieces that we have is really something called a smart contract. And that's something that we're leveraging here to help secure the information. So as the information comes in from the different institutions, as we put it into that one format, we're making sure that there's no information leakage, that we're only delivering the data to those who should have it. And we are leveraging technology for that in the form of smart contracts.
Great. And as you talk about that and the evolving technology behind it, it's important to note this is not the end. This is the beginning. This launch is the very beginning. So, I'll stick with you, David, for a second, and just tell us, technology-wise, what are we expecting to see in future versions as the platform is updated? And then Cynthia, we'll go to you to just sort of take it home and talk about, future plans on the business side and, what it means for the industry. So David, tell us what can we expect to see? And I know we're getting ahead of ourselves. It only just launched, but what can we expect to see in subsequent versions?
From a technology perspective, we're going to continue to build on this tremendous foundation that we have right now. We're going to introduce additional APIs for lenders to be able to consume the data in real time. So one of the things Cynthia mentioned earlier, this is a real-time platform. As things are happening on the agent side, they're flowing through our system and out to the lenders. The APIs exist today, and we're going to continue to evolve them over time so that real-time information can be delivered, so it can be then consumed by the lenders and make this a much more efficient process.
Yeah, I mean, it's really a communication thing, right? Like getting everybody talking and getting the data in there, the right data, and making it happen in real time. Cynthia, can you sort of move that a little bit forward and just talk about, conceptually what's next? What else is this platform going to do? When we do the next one of these interviews, what are we going to be talking about that the platform is doing?
Yeah. So we're, as we keep on saying, and I'll say it one more time, but then I'll expand, this is foundational. We're creating a new digital foundation for this market with kind of the proper ingredients, I'll say, at the core. And so we can build everything from here, but I do want to make the comment that we don't want to build everything, nor should we build everything. We're happy to partner with others, right? This is about a collaborative effort. The four banks have come together. These banks are fierce competitors in the day-to-day of what they do. And here they are coming together. We want others to come with us, right? So we want the other agent banks. We want the buy side or the other lenders that are in these deals to come together. We've formed committees so that we can all talk together and make sure that we're hitting and solving the highest priority problems first. And now that we have real-time data as one of our key building blocks with the technology that David just mentioned, we want to bring everyone in together to then create additional solutions off of this, right? So there's many parts of the loan ecosystem that are challenged right now operationally, and we want to start what's the right word to create the right frictionless process, right? So the friction is what's the problem with this asset class. The asset class can't grow because of these operational issues. But if you take the friction out, and as I just mentioned, through the transparency, that's really, and I don't know if we mentioned that yet in this conversation, but the transparency, right? The ability to get this data real time through the APIs that David mentioned. that's the power of the platform to then build all these other solutions from and create what we think and will help, take the friction out of the process. So there's a lot of other workflows that we're going to focus on to do that.
Yeah,
right.
and I'm sorry,
Michael, can I just, I just want to add one thing to what I want to
Yeah.
expand on what Cynthia was saying around both the collaboration and the frictionless. What I didn't touch on before is we're going to need to collaborate with partners. Part of that is around standardization of the messages so that they can flow more freely between the different systems. But then on top of the messages themselves, we need to make sure we define and create a standard protocol for the different systems to be able to talk to each other. And these are all things that over time, as you talk about what's coming next, these are some of the things that we're starting to look at and talk to people about.
Yeah, and I mean, if there's a unifying message here, it's that I'm picking up on, it's the growth, and you're saying reducing friction and so on. And you talked about the size of the industry. We've talked about this in our meetings. The idea that this is going to enable and attract more people to this sector, more investment in the sector, more loans, and more activity by removing the barriers and bringing everyone together. Do you want to just wrap up and just talk about that, about where you see the growth being for this industry when this takes off?
This asset class is a fantastic asset class. There's all kinds of characteristics around the asset class that actually make it very attractive. It is a fixed income, debt, senior secured asset class that is collateralized generally, right, for a certain part of the market by the assets of the company, that's the borrower. The risk profile is really strong when you kind of look overall of this asset class versus others. And it should be growing exponentially, particularly given that it's a floating rate market in an inflationary time, right? So, it's a natural hedge there. All the things around the asset class are fantastic. The problem has been the operations. And so if we can get the operations to be more efficient and we can take that out of the equation, we think more money will flow into this asset class and that will benefit everybody. There'll be more volumes. There'll be more deals to do. The borrowers will benefit. The cost of capital should go down for them as more money comes in. And so we think that this is a win-win for everybody involved, whether you are the borrower, whether you are the agent bank, whether you are the lenders or a fund manager, no matter where you sit, taking this problem, I'll say, out of the market, and it won't be overnight, right? We have to all work together, as we said, collaboratively, will really change the paradigm, and we think take this asset class to the next level.
That's great. And I think that's a great note to end on, going right up to the next level, really transforming the industry. And it's exciting what you guys are doing, and congratulations again on the launch. Cynthia, David, thank you so much for the time today. We really appreciate it. If you'd like to learn more about Versana, you can visit their website at versana.io. If you'd like to learn more about Forefront, you can visit us at forefrontcoms, that's COMMS.com. And thank you again, Cynthia and David, and thanks to all of you for watching and listening.